Ticker symbol TSLY is a new covered call ETF that has pretty much been all the hype in the dividend income focused community over the past few months now. And maybe for good reason, considering on the YieldMax ETF TSLY website, it's showing a distribution rate of around 59.89%, which is definitely higher than probably 99% of all other ETFs in existence unless I'm missing something. But in this video, we're going to go over the TSLY ETF and not only explain how it works and what it has to offer, but also I want to show you guys the exact math on how a relatively small amount of money invested into an ETF like this could be absolutely life-changing for income-focused investors that want massive dividends from day one. Now stay tuned because I promise you some of these numbers are going to shock you. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So heading over to the YieldMax ETF website, I'm sure some of you guys are familiar with this ETF by now, but a real quick overview, TSLY is a YieldMax ETF. Now it's considered a Tesla option income strategy ETF, so you're probably thinking it uses covered calls like lots of other different option strategy ETFs, but this ETF doesn't actually even buy any shares of Tesla. It uses a synthetic covered call strategy, which in short does something very similar to a normal covered call strategy, but of course without actually buying the shares of TSLY. That's the biggest difference. Now getting to the good part, some of the most recent distributions of this ETF have been honestly crazy. And just a side note in case any of you guys are curious, I personally do own a few hundred shares of this ETF. I don't own too much of it because it is a little bit risky and it's sort of outside of my normal investing strategy, but I do own a few hundred shares and so far so good. But looking at some of the most recent distributions, back in December we saw 60 cents, back in November 58 cents. Then back in October, 58 cents again, 58 cents back in September. Then back in August, 83 cents, and back in July, $1.06 on a monthly basis. And really, even the smaller dividends of 44 cents, let's say, back in May for TSLY have still been massive relative to other ETFs out there. So now at this point, you're probably going to ask me, well, what's the bad part of this ETF? Pretty much all you've said so far is that this ETF uses Tesla and writes something similar enough to a covered call on Tesla. But I promise you, it's not all rainbows and sunshine. You can see that this ETF does have some massive decay. So much so that on the max time frame, this ETF, now being around for just around a year, is down almost 45%, which is pretty bad considering even with those massive dividends, pretty much all the profits that investors receive from the dividends are most likely wiped out, unless of course you bought TSLY at very strategic times over time. And don't worry, I have all the numbers to be even more specific. So let's say you bought TSLY back in November 23rd, 2022, which like I said was more or less around a year ago. Let's say you bought $10,000 worth of this ETF and you reinvested the dividends every single time. So TSLY had a starting price back then of $20.04 per share. And as of right now, it's around $11.72 per share. Now with this, an investor would only have a total return, which is dividends plus price return included, of 7.94%. So the $10,000 initial starting balance would only be worth around $10,794 at the end of everything. Now I wanted to share these exact numbers with you guys all before we go over the crazy math on what an investor could of course perceive on a monthly basis in dividends with a relatively small amount of money invested, just to show you exactly some of the downsides and some of the risks when it comes to investing into super high yielding ETFs like TSLY. Even though TSLY has seen some massive dividends on a monthly basis, and like I said, even the smaller dividends have been great and much bigger than pretty much most other ETFs or stocks across the entire market, it does still come with a cost. And that cost being pretty substantial considering that a $10,000 investment back in November would be worth more or less $10,000 or $11,000 come right now. But regardless, in theory, this ETF could still generate a ton of income on a monthly basis from just the dividend if an investor, of course, was interested in buying into maybe more of a little bit of a risky asset in return for some massive cash every single month. So like you see in the title of the video, I said that $20,000 invested into TSLY in theory could generate enough income to change someone's life with the dividend income on a monthly basis. And honestly, I stand by that because with just $20,000, an investor could buy 1,706 shares of TSLY with the price that it's trading at as of current. Now, as you see right here, TSLY does not pay out the same amount of dividends on a monthly basis, and this is largely because of the synthetic cover call strategy. TSLY and all these yield max ETFs are going to pay out a different amount depending on how the underlying or the reference stock, say Apple, Tesla, whatever it might be, trades within that given time frame, how much premium there is, etc. But regardless, with 1,706 shares of TSLY, last month TSLY paid 60 cents on a monthly basis back in December, so that means an investor in theory could generate $1,023 in dividend income on a monthly basis if the dividends were to stay the same as they were, at least over the last few months. Now, $1,000 in dividend income is quite a bit, especially if you're just going off of a $20,000 investment. To give you an idea on how much that is, if an investor was to do the same thing, but instead buy something like SCHD, the Schwab US Dividend Equity ETF, which is a very popular ETF that I'm, side note, a huge fan of. An investor with $20,000 could only buy 266 shares of SCHD, and SCHD more or less pays around 22 cents on a monthly basis if you were to divide the quarterly payouts by 3. That means that an investor could only receive around $58 or $59 on a monthly basis from dividends if they were to invest into something like SCHD. Now, once again, like I explained earlier in the video, and I'm happy I did so, everything of course comes with its cost, and invest into TSLY for that massive juicy dividend, although it can be appealing, and don't get me wrong, I even got sucked into it. I do currently own a few hundred shares of TSLY. Like I talked about a little bit earlier, there is of course definitely a risk involved, and especially if you look at how TSLY has performed, even over the last year, it's down 12.5%. But again, the max time frame is sort of scary, down 45% so far. So even if you say did invest $20,000 into this ETF, and even if you were receiving, let's say, $1,000 per month from dividends, what are all those monthly dividends really going to be worth if your underlying investment keeps going down and down and down? Now, I get it, a lot of dividend, more income-focused investors always say things like, well, you might as well just reinvest into more shares of TSLY with part of your dividend, if not most of your dividend, because of course TSLY is most likely going to keep decaying over the long term. And although there are different strategies when it comes to ETFs like this, and I have went over them on my channel, so definitely check out my other videos, I generally speaking think that when it comes to these sort of ETFs, or really anything that's offering, say, above a 10%, much less a 59% dividend yield or distribution rate, I think for me personally, like I said, my personal strategy, it doesn't and probably will never make much sense to load up on a ton of this for my portfolio, although it's fun to hold on to some shares and see how it trades. But now I want to hear from you guys down below when it comes to TSLY, or even when it comes to investing into super high yielding ETFs or stocks. I want to get an honest reading in the community. Are you guys generally invested as of right now in TSLY? Like, would we find TSLY in your portfolio as it sits currently? Or if not, comment down below why you don't or won't invest in something like this. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.